right, welcome to Apartmentalize 2022. The Apartment Academy is here, live streaming, talking with some of the attendees here. We want to hear what's going on at the show, what's cool, what they're going to be doing here. And we're starting today, we're kicking off the podcast with Christy Fickert with RealLink. Hi, Christy.
Hey, everybody. Hey, hello from San Diego.
Yeah. Hello from San Diego. So, Christy, tell us a little bit about RealLink first before we get started.
Sure. RealLink, we're just a one single platform for video engagement in multifamily. So it's a video tool that's used on-site by on-site professionals so that they can produce content that converts and engages their renters and turns into leases or, loyal residents who want to stay. So one platform. You're not using multiple apps or multiple technologies, and of course it integrates with most of the industry CRMs and other systems that you would want it to, so you can track everything.
Right. So that's technology that in the last 2 years, like the importance of that and doing that well has really increased because remote leasing and COVID forced us to do things in a different way. So the technology you guys have brought is really, I think, probably exploded.
Absolutely.
Yeah.
And, today's renters are expecting this. So whether we are comfortable with video or not, the renters are absolutely expecting that. And not everybody is renting remotely anymore. We're kind of through this pandemic where people are coming back, offices are open. But you do have a group of people who, it's not that they don't want to come to the property because of a pandemic. They just want the convenience of it. I haven't stopped ordering my groceries online because the pandemic is over. It's just convenient.
Yes.
Fits better into my life. And so a lot of people are wanting to do that as either, a part of their early leasing process. They just want that convenience of connecting over video. Well, let me do this, pre-shop to see if it's worth my time driving out there. Look, gas prices today are a little crazy. So it's saving them some time, and then they're also coming to physically tour. Or you also see people who they don't need to see it in person. And we've seen that about 52% of people say that they don't even need to come out to physically see the unit.
Right. Now
that's crazy.
Yes,
but
that's a massive sea change in our perception of how we thought people needed to lease.
Yes.
So I think it's safe to say that you are at the forefront of some really advanced marketing, leasing, thought leadership. And so what are you expecting to see or hear about at the show this week?
Okay, so the biggest buzzword, and everyone's talking about it, is centralized leasing. And so this model, it looks a little different for every company, I'm finding, but this is basically centralizing your operations, and you all, and what you do at Leonardo 24/7 is something that helps with this.
Yeah,
but
similar.
It's, we have technology, and it doesn't have to replace the humans. We're not taking away the human element that the industry was built upon, but there are ways to help people be better at what they're really good at doing, right? So centralizing your operations. And I've seen some organizations who are completely taking their leasing teams, their managers, and they are working remotely, and nobody is on site. And then if prospects are touring, then they're touring, taking a self-guided tour, or they're touring virtually with a product like RealLink. And then you have other companies who have a concentration of properties in a specific market or neighborhood. And so they're kind of using this pod approach where instead of having 4 different leasing offices for 4 different properties, they're kind of pulling those people into one office. And then, they're managing operations from there and touring prospects through multiple different properties, but you need fewer people to do that. So what it does, and what I love as an industry veteran, is it's letting your leasing teams and your managers do what they do best. They're not having to get packages and sort packages and deal with all of those other nuances, but they really are focusing on your renter then, because you're alleviating all of these other pain points.
Yeah, maybe giving the opportunity for some of your best renters or leasing agents to be spread across multiple properties and sort of, spread the love a little bit.
Yeah, so interesting. If y'all haven't checked out TriCap out of Chicago, they are a great test case about this. And Suzanne is here this week, so I'd encourage everyone to go find her and connect with her. They are an operator,
okay.
Yes. So they have gone completely remote with all of their leasing teams, and they have actually increased their salaries by 70% for the people who are typically on site leasing teams, which is amazing. 70% salary increase in a market where, we're having trouble hiring people and retaining talent. So that's pretty great. And their resident satisfaction scores are going up, even though they took their people off site. So it's an early use, some early indicators there, early use case that people should go and study and check out for sure when it comes to centralizing operations.
Wow, that's interesting. I know you said it doesn't reduce the number, but but maybe it does a little bit. I mean, something had to make room for those increased salaries, right?
Sure, but I think what you're doing is you're reallocating your assets, and then through technology, like there are some things that a leasing person doesn't need to be doing every day. For example, handing out packages, or when we know that 50% of the renter base doesn't need to physically come and take a tour. They've told us through research that they're willing to use video or virtual touring. Well, then you don't need as many people on site to take tours if half of your renters aren't wanting to tour in that way.
Yeah. So I've heard it proposed. So one thing is you have a few. You reduce the overall staff count, perhaps. You can reallocate it to better salaries, which this industry sorely needs, or. I've heard people, and interesting. I'd love to talk to the company from Chicago, see if they've considered this, but also increasing like the general population of just customer service people, just to provide focus on the people.
Yes.
In a way you can't right now because you don't have the overhead for that.
That's exactly what they've done. So, and they actually, Suzanne has it modeled out. So again, encourage anyone to go and meet with her. She'll share anything. She's an open book, which I love. I think that's how we all should be.
All right, somebody needs to get Suzanne.
Yeah, go find Suzanne Hobson
on the Apartment Academy tomorrow. Okay.
But they did that. They changed the titles. They changed the job descriptions a bit. And so what we're property managers are now in charge of that customer, client, renter engagement, if you will.
Cool.
Yeah.
Well, what do you think, Christy, in terms of scale? Like, how large of an operator do you think you need to be to really take advantage of centralized leasing? So
I saw centralized leasing years ago happening with the smaller operators, actually. It was easier for them to do because they didn't have, their teams weren't as big, they didn't have, their technology stacks were a lot smaller, and so it was easier for them to sort of figure that out. I don't think you have to be any specific size. I don't think the same model works for every organization. So something that people can do, if your company just isn't embracing this yet, but you're behind it, or this is catching your ear and you want to know more about it, there are things that you can do just in your marketing stack to start to centralize that. I still see properties today that don't let people self-schedule their tours to come out and visit the property. That's a problem. Let people, if they know they want to come and visit you and they want to come at 10 a.m. tomorrow, let them look at a calendar and see if that time is available and book a time to come out, and that's saving your team so much time.
Yes. So I sense in that moment a gap, a technology gap, and that's being filled by somebody. Is there a technology stack that you can riff off the top of your head that people need to have in place in order to facilitate this?
I think what you have to do is you have to evaluate. We have a really, we tend to, in this industry, we're getting better about it, but we tend to be very heavy at the top of the marketing funnel. So we tend to invest a lot in advertising and things that drive traffic, but we don't pay as much attention to the middle of the marketing funnel or even the bottom of the funnel. Right now, rent increases are, 20% rent increases, occupancies are high. We have more renters now than we've ever had. So we really should probably be paying attention to the middle and bottom part of that funnel to retain the people that we have. We're going to have a big, I think we're going to have our work cut out for us convincing these people to stay with us when we're increasing rents by 20%, and their expectations, they're going to want to see more value. So I would say when you're looking at centralized leasing or any part of your marketing funnel, is to make sure you're really evaluating the middle and the bottom of the funnel too, not just your big technologies at the top like your CRMs and your advertising, but everything in the middle, all of your conversion tools, resident engagement tools. Those are really important to evaluate, especially right now with these market conditions.
All right. Well, if you want to learn more about remote leasing, but also, of course, video tours, do you know your booth number? I hate to put you on the spot.
I should, but I come to network, and we'll connect.
But come find Real Link here if you're interested in learning more and finding somebody can find Christy and put her in touch with you. Thanks so much for joining us.
Thanks for having me. It's great. Have a great weekend at NAA, everyone.
Have a great show.
Yeah.
See you. right, welcome back. Continuing our live podcast here from Apartmentalize 2022 with the famous and admired Kate Good with Huntington Residential. Kate, so glad you could join us.
Thank you.
Find some time for us.
I'm not only happy to be here, I'm also happy to be in San Diego. It's just been amazing, and this conference is just getting started, but it's already on fire. Don't you feel it?
I think people are so happy to be out again. Last year, we thought it would be like that would be the year, but people were still hesitant.
Still cautious,
Yes.
I was there, but it was different. It wasn't like this.
This just feels like kind of the old days.
Yes.
So yeah, everybody was really happy. And you're speaking tomorrow.
I am.
And for those of our audience that's not able to attend, it would be great if you could talk about your subject a little bit, which is really interesting, which is the digital nomad. How multifamily is accommodating that lifestyle.
Yes. Well, when I come to Apartmentalize, I always want to come and report on whatever's new, hot, and trendy. And when I looked out in the apartment sphere, I noticed that we are seeing this trend, this heavy trend of the renter that offices at home. So that got huge during the pandemic, and apartment communities were converting spaces in their clubhouse so people could have their meetings and trying to make that safe and everything. And it's just really continued. It's continued. I have an apartment community in Houston, Texas. It is all studio and micro apartments. Average square footage is under 500 feet. And 38% of our residents office at home, report themselves as officing at home, meaning they don't go anywhere for work, they're at home. Now imagine that, and living in 450 square feet.
Wow,
so I wanted to know, who are these people who can do that? I mean, I want my closet to be 450 square feet. How do you make that your whole kitchen, bed, and office too? That's crazy. And so when I got to know these residents a little bit better, I realized they made the choice to live in this area. Their work didn't choose them to live in this area. And they may be there for 6 months. They may be there, for a year. They may only be there for 3 months, but they consider themselves to be digital nomads. So the idea that people are officing at home now has become such a trend that people are seeking professions that allow them to have this kind of lifestyle, and I'm so intrigued by it.
Yeah, and communities that can accommodate it.
Right.
So what are some of the amenities you think about when you think about trying to accommodate a digital nomad lifestyle?
Yeah. Well, I've got 3 apartment communities that are under construction right now, and I was lucky to go through the design phase with this trend already emerging, and did my surveys and talked to the people that we were meeting with and we were renting to really find out, what do you want? How can we build the perfect apartment community for you? They love that meeting space, and instead of that, and I think this is one of the terms that is so overused on HGTV, open concept, everybody wants open concept. The truth is, in our clubhouses anymore, they don't want open concept. It's too noisy. It doesn't give them private space. They want to come down to the club rooms and have some workspace where there's not a espresso and frappuccino machine that's making tons of noise down at the Starbucks. They don't like working at the Starbucks anymore. It's too noisy. They can't do a Zoom there. So they want to have small spaces where they can do a Zoom, where it's got good lighting for that, the sound acoustics are good, and they can really manage their lifestyle of working here. So we've got to have space that's an extension of their home that acts as an office. The next thing that they really want is high-speed internet and that instant on.
Yes.
So we're shifting all of our packages now to managed Wi-Fi, where we buy it in bulk. And honestly, when I'm buying it for the whole apartment community, I'm going to get it a lot less expensive than if you're going down to, the Wi-Fi store and the television store and hooking up your house, right? And I'm not mentioning any brands because I don't want to upset anybody. But through managed Wi-Fi, we can get it so much less expensive. But the value is truly this. It's instant on. So when that digital nomad shows up at the apartment community and we're handing over the Bluetooth key fob for their door, and their internet's on right away, they can go to town, and they don't have to worry about getting all that set up and having these accounts set up all over the world wherever they're going for their newly found lifestyle.
And do they expect? Do you charge separately for that? Do they expect that to be wrapped up into the rent? What's the market expectation?
We are exploring that right now. At the first community where we did it, we charged a $125 amenity fee.
A month.
Amenity fee per month.
Wow.
And that included your high-speed internet, streaming television, one reserved parking space, water, pest control, and a really happy team that's always there to serve you. And the use of all of our amenities too. So $125. Of that, my cost for that high-speed internet and streaming television is a smaller portion of that. It's under $40.
Right.
So
it's a good margin.
It's good margin.
Yeah.
But there are companies out there that are charging $100 to resell that Wi-Fi and streaming television also, which, great. A lot of markets are going into that right now. Some of the suburban markets are still feeling some price sensitivity to it, so they're moving into it. But we're finding in the urban markets, it's pretty accepted that if your building has managed Wi-Fi, it's rolled in and there's some profit on top of it.
And the access to these workspaces, that's included in the rent?
Yeah, that's included in the rent. And what's great about the managed Wi-Fi is you've got your own network, right? So if you pick up your iPad and you head on down to the work area that we've set up, the community office, you never leave your network. So your Wi-Fi goes with you as long as you're at the property.
Oh, that's
interesting. And so it just makes for a really seamless work experience for them. And I will say that's our number one selling feature right now for the person that considers themselves a digital nomad, an office at home type of work person.
So I think the flip side of the digital nomad story, I think, is the ability for them to move around sort of at will. So are you accommodating shorter lease terms as part of this strategy?
Yeah. Well, that's always been a interesting challenge with lenders. Lenders don't want you to have short-term leases.
Right.
And
yes.
I can tell you that our lenders have limited us to a certain percentage of the apartment community, how many short-term leases we can have. And that's too bad, because this we could rent a lot of apartments if we could rent them for under 6 months at a time. But there's companies out there now that have membership-based services that they will set up your apartment for you in markets all over the world. And so you sign up, you're a member of their company, and you say, okay, I want to go live in Austin, Texas now, and I need to be there for 4 months. You pick out your apartment and you live there. And then when you leave, they still have that lease, and they're going to fill it with the next person that wants to live in Austin, Texas. So my co-speaker tomorrow at Apartmentalize is Bill Smith, and he's the founder of Landing. And Landing is probably the biggest and the only one that I know that's doing membership-based housing, and they're all over the world. And they manufacture their own furniture, so there's a lot of consistency in their product. And I think that for people who want this kind of lifestyle, this is really the answer for them, because they can go to an app and look at all the places where they could live and what that apartment's going to look like. And if they don't have that city, they'll set it up for them.
That sort of reminds you of the old Oakwood model.
Yeah.
Like the Oakwood corporate model.
Yeah.
And the Achilles heel of the Oakwood model was inconsistency with being able to keep those things filled. My experience, this was years ago when I was on the operator side, was at some point we would have trouble filling the Oakwood spaces, and they would wither.
Yeah.
And then they would want to expand, it wouldn't have room. It was problematic. Do you see now enough traffic, this digital nomad lifestyle, demand is sufficient now that you can consistently expect all of those kind of loosely held spaces to be filled on a regular basis?
When we accept a lease from Landing, it's on our terms. It's for 12 months. So it's really that company's responsibility to keep it full, and they do. So it's a very interesting emerging niche. But when I look at my apartment community and I see that 38% of our residents office at home, and that's what we know of. That's just
who admits to it.
Yeah, who thinks of it that way. I say, yeah, this is really growing. Many of those people don't have cars. Their lifestyles are just completely different. But this was something that just blew me away. I thought that this would be somebody who was like 25 years old, and I want to be a social media influencer, and I'm going to live all over the world. And I'm thinking, how many of them are there?
Yeah.
How many do we need, right?
Yeah.
But there are a lot, but that's really not the key person here. I found out that families are doing this. So families with young kids are taking their kids on a journey of exploration all around the world, and the kids are helping to decide where they're going to go live next. There's entire Facebook groups dedicated to this camaraderie and tip sharing, and this is where we've gone that we love, and it's pretty fun to see it happening.
I don't hear Airbnb being discussed in the conversation. Are they playing a role in this or no?
Airbnb is reporting that they are seeing a greater number of people searching for apartments for 28 days or more. And, people used to think of Airbnb, hey, I'm going to Napa for the weekend. I need a place in Napa, right? Well, Airbnb is now saying those short-term stays are not the growth that we're seeing. We're seeing it over 28 days.
And so do you think, so Airbnb has been kind of controversial in a lot of multifamily communities, largely because people that weren't supposed to be Airbnb their unit were doing that. There was then some movement to say, well, at the corporate side, we'll just embrace it. We'll set aside some units for that. Is that happening more now to accommodate this lifestyle, or is there some other, like you were talking about landing, is there some other technology platform that's filling this gap?
I think that's what we're all trying to figure out right now is what's next. So what was scary about Airbnb and Guild and Stay Alfred and a lot of those companies is they went away during the pandemic, and it wasn't managed as well, and that we took the hit for that. If you had apartments set up with those companies and you were on some sort of rev share instead of a master lease, you were only making money if it was occupied, and a lot of times they just came in, dropped the keys, and said we're out of business. And there was a lot of pain out there for those apartment communities that were working with those companies. I don't know which ones are still around and aren't. We've just made a decision that because of our lenders, it's not right for us, and we're not going to do it. But I think that there is a really exciting opportunity for whatever existed prior to the pandemic to kind of refresh and renew and come back, because the apartment industry certainly needs the professionalism there and the consistency there.
Yes. Kate, are you able to successfully sell to lenders the idea that there's a premium attached with accommodating this lifestyle and the amenities that you're putting, that you can say, look, we expect to have 10% accretive value on top of what you normally would expect because of these amenities? Are they buying that argument?
Oh, yeah. They love to see that in the underwriting all day long, right? They love to see it. But then when it comes down to how many leases, when do they expire? Can you control that? So we are talking to one of our lenders right now, and we've been successful at saying, it's more of an urban market. We think we're going to get students. We think we're going to get a lot of tech workers in and out. If we handle our expirations in such a way, meaning we'll make sure we only have so many in November, so many in December, and then we don't have more than X amount per month, is this something that you could agree to? So it would really be up to us to then manage within that promise. And they've been open to that, and I think they're seeing this is happening, and if there's some way that we can insulate, they're just worried about their risk, and they want to make sure we're being good stewards of the community. Is
the amenitization that's required, maybe the technology required to accommodate, is it a meaningful number on top of your per unit cost, your development cost?
Interesting. No, and I would say that it's things that we would do anyway, because it's just what we all need today. So we're not necessarily doing it just for the nomadic renter. It's what we all want in our home today. And if we are building it for the nomadic renter, I think other people will see, I need that too. So for example, I'm not a nomadic renter, but I do have a apartment that I keep in Kansas City. And it's where my husband's from, and we spend a lot of time up there, and we're building a house, and right now we just have a little studio apartment. And I found myself up there more and more, and one of the things that I love is on the Apartment Communities app, I can reserve one of 12 different spaces in the apartment community to have a Zoom call or a meeting that I want to have, or just space to get away where the dogs aren't barking and I can do my work for a couple hours in that day. So I think that, we're needing this. And when I look around this apartment community, I see kids in there with their parents doing homework. So they're using them as homework stations too. So there's a lot of people that have that need but might use it for different reasons.
Well, Kate, in our closing moments before we let you get back to the show, is there anything at the end of your talk tomorrow, is there a punchline you want to deliver that people should remember as they think about this emerging lifestyle in multifamily?
I think the things that have really made me just stand up and take notice is how quickly and how many people are interested in this type of lifestyle. If you just go to TikTok and you put in hashtag digital nomad, you're going to be overwhelmed with people bragging about this lifestyle and how much they love it, and giving a lot of credit to the places that they found to live in. Cool. And talking about why they live here and why they chose this apartment, and telling other nomads, when you get to the city, this is a great place to live. And it's this word of mouth emergence and kind of living the dream, lifestyle that for me, it's fun to watch and see, and makes me kind of wish I could do it again,
It's sort of adjacent to hashtag van life, feels like.
Exactly,
right?
yes.
Yeah. All right, well, look, I mean, you have a reason to go play on TikTok and for work. I mean, it's a great excuse to go to TikTok. All right, Kate, thank you so much. Really insightful stuff. Thank you for sharing that. Good luck in your speech tomorrow, your talk.
Thank you.
Thanks for joining us. All right, we'll let you get back to the show. We'll see you with our show coming up in 15 more minutes, so stay tuned. welcome back to our live podcast here at the Apartment Academy here at Apartmentalize 2022. We brought along David Freeman Realty Group, to talk a little bit about their company. You guys are developers. No, well, you're owner-operators, not
Correct.
developers.
Correct.
You're typically acquiring assets already built, yeah?
Yeah, usually 1960s, 70s suburban garden style.
Got it. And what, just generally speaking, David, what are you hoping, like when you go to this show, for those that maybe have never been here before, what are you kind of hoping to see? What are you looking for today?
Well, sometimes we can all get caught up in our day-to-day and our routines and be very insular with our thinking and, kind of head down, not really looking outward at what's coming or what's out there. So for me, personally, I started coming to this 6 or 7 years ago, and it was something I found was really reinvigorating, giving meaning and purpose to a larger industry and, who we serve, what we serve. And there's a lot of learning. The education's great. You get to see, it's like a local state association on steroids. Everyone brings out their best, absolute best. So it's really fun and exciting to see all that.
Yeah. From a technology standpoint, this I think this has always been the place to see the cutting edge of what operators might be adopting in the coming years. Is there anything like that you're looking for when you're here?
Absolutely. So usually when I come out here, very open-minded, but try to have a couple of intentions and purpose for the visit. This year, a lot of what I'm focusing on and looking into is AI, leasing, and technology. And I would say a year or 2 years ago, maybe it's on the radar, but it's not where it is today. And there's so many people in the space, and it's easy to kind of get lost in just what everybody offers. So just trying to learn what it is, because it sounds like it's a way of a future.
Yeah, I agree. I think that it was a technology that, as you said, still isn't mature, but really came into its own during COVID. Like the idea that we didn't necessarily need somebody there at the property to take a tour and successfully lease a property, and that notion that we had that we always needed people at the property seems to be dispelled a little bit, and that's kind of where AI is coming in, no?
Yeah, and you hear a lot about how it's difficult to find good people for help, and how site teams have been more challenged with more on their plate. And look, residents, it's tough for them as well. So, really when we look at it, I think we do a nice job with our operations. So for us, specifically when we look at or consider AI, it's not necessarily what kind of NOI or revenue boost are we going to get. It's how can we give a more precious resource, time, back to our staff so they can focus on higher value things. So that's the promise, and that's hopefully what we can kick some tires on. One of the things we'll do out here.
This morning we had Christy Fickert on from RealLink, who was talking about this notion of being able to, through remote leasing, to be able to have better resources spread across more properties, so you could do better leasing more consistently and pay them more, because in bulk you have fewer leasing agents, but they're doing a better job, and you can pay them better as a result.
Sure, and you're what you're talking about, like centralized leasing.
Yeah.
So I've heard people talk about it. That's not something that I've really looked at for us. I don't know if we necessarily have the scale or even maybe the right properties for that. But certainly, that's a lot of what I've heard with how difficult it is to find talent.
Yeah. So the marketing landscape, the leasing landscape has certainly changed in the last couple of years. But as an acquirer, an operator, just talk a little bit about how the acquisition market has changed during that time. So pre-COVID, during COVID, post-COVID, what's happened to deal flow for you?
So, certainly over the last 10 years, it's been pretty much a nice bull run for the industry. And the last acquisition we made was at the very end of 2020, pretty much like a day or two from turn of 2021, in the middle of COVID. And that's a little over 300 units in Philadelphia suburbs. And at that time, when we bought it, it was I would say 60% occupied, very heavy value add lift of probably $70,000 or more per unit that we were going to do. And even at that much capital that needed to go into it, and that level of lift for the operations, still pay full price at that point. When we're looking at our underwriting, there's no there's no cap rate to consider because that's at that it doesn't make sense. And I feel like the market's just gotten a little more nonsensical since that point.
It's gotten worse.
I've seen stuff listed that they're great properties in great areas. They check the boxes of exactly what we would want, kick the tires on some of the underwriting, and can't make anything make sense. And talking to some people and trying to understand how are people making these work. I've run these numbers, and I'm not really sure what they're doing. Maybe they're hoping and praying on some pro formas. We'll see with interest rates going up what's going to happen over the next couple of years, especially with some people who might have short-term or floating rate debt that's going to mature.
Yeah. So I did some time with the developer in Los Angeles, and we used to always get nervous anytime we won a deal because it's like, what mistake did we make in underwriting? Because anything that was properly underwritten never seemed to really pencil as an investment.
Yeah, I always have a mini moment of panic after our offers get accepted because we are the guys that are paying the highest price for this property.
Yeah, that's right. So are you able, what does your crystal ball tell you about pro forma rents for the next 2 years or 3 years? By the way, do you have a typical holding period or these long-term holds?
It'll depend. My dad, who's out here in the audience, he has a joke. He doesn't get buyer's remorse, he gets seller's remorse. So, these are, as a family, usually generational for us. Certainly there are properties that will sell, but he's had his oldest property longer than he's had me. And there's sometimes properties where, we feel it's the right time to let it go. So it'll really depend.
All right. Okay. So you're not operating under the same pressure that some REITs might operate under that are like 3 to 5 year hold period and they've got to churn the property.
Absolutely not. For us, in the way we operate our business and execute on our plan, we see a lot more benefit to a longer term horizon. And certainly that doesn't meet with everyone's expectations, but that's how we found we've been most successful.
Well, let's talk about that for a little bit because not to get too technical with folks, but properties that are acquired on an ROI basis, not cash on cash return basis, often incorporate the exit.
Yes.
And the accretive value of the asset itself. In a longer term hold, you're really just talking about your return is really just a cash on cash return. Is that the correct way to think about it?
We'll look at both components, and really, even if we have a longer horizon than a 7-year or 10-year model, because most of the time when we put debt on a property, it'll be a 7 or 10. Especially with historically low interest rates recently, you really want to lock those in. But just to understand if it's a good investment, we'll look at the cash on cash, but at the same time, we're also considering a terminal value because we want to look at the whole thing holistically. So we will try and figure out what is that accreted value as well on top of the cash on cash.
Got it. And what's an acceptable return in the interim prior to considering terminal value?
Prior to considering terminal value?
Without considering terminal value, what would be your expected, let's talk about using the terms cash on cash return until you sell the asset?
So I would say it'll depend on call it the risk profile of the property, but somewhere between 7 and 9% is usual for us. I would say usual. This is an unusual market, so I've heard a lot about for people to make deals work, you really have to compress that. So haven't really gotten comfortable with where that number is these days, which is why it's been a little over a year since our last acquisition.
Yeah, 7 to 9%. Is that in your model generally highly leveraged? Almost no. Well, you said 7 to 10 year loans, so those are pretty short-term loans. Yeah,
so we're doing pretty traditional financing when we do this stuff. We're not necessarily doing anything that's groundbreaking. So leverage points for us are usually 75-80% loan to value.
Okay, so typical. So is that an ease? Can you find those deals these days?
It's really challenging. People are really paying up for properties. Rent increases have been really, really high. Certainly that comes with rising costs on the expense side, but it's how long can you underwrite 6% plus rent growth? When's the music going to stop? I don't know. So that's a hard thing when you're looking at these deals of how high can I really push them.
Yeah, that brings me back to my question. I interrupted myself, which was your crystal ball. If you if you can't underwrite based on today's economics on a return because it just doesn't pencil, what can you get comfortable with in terms of rent growth underwriting to get a deal to pencil? And you're saying traditionally it's been about 6%.
Well, I would say traditionally, so for us, we're looking at value add. So we're putting money in.
Right.
We're doing things that focus on kitchens, bathrooms, but also trying to find ways to have energy efficiency. So if there's a boiler system, doing some high efficiency boilers, energy controls, et cetera, and obviously better and more efficient operation in addition. 3 to 4% is more of a stabilized after you do your value add.
After the lift,
and
yeah.
The value add is really going to depend on the market. What is the current operator doing with their asset as far as rents? If you put your money into it, how high can you go? What does the market bear? And that, right now, first year, 2 years, you can go 6% plus depending on what it is, but how long?
In your value add plan, in your value add, like your capital expenditure plan, are you doing anything differently now when you think about adding value to property that is accommodating kind of the lifestyle changes that we're seeing now in multifamily since COVID? Like Kate Good was here talking about the digital nomad lifestyle. Is that playing into your capital plan now? Do you have to?
Certainly a little bit. I mean, the way we operate and strategically what we tend to buy are Class B apartments, very much workforce housing. Usually our apartments don't have much by way of amenities. They're not Class A luxury. At the same time, we do have some properties that have that, but we are more so looking for amenities, services for people to make their lives easier. We've done stuff, door-to-door trash removal. We're trying to find ways to add, outdoor space with playgrounds, dog parks. Very traditional on one hand, but on the other, we've seen a huge demand and spike for those kinds of amenities and a lot of appreciation from residents when those, as simple as they sound, when they're there and available.
What about services that really are focused on resident engagement, like getting people to get together socially, or coupons to the local restaurants and that sort of thing? Is that people said millennials care more about that now? Have you found that to be true?
I think people like the community and the engagement. Certainly, like the rest of the industry, a lot of our properties took a little hiatus from pulling people together. I would say this year is really the first year since 2020 that we're kind of getting back into that swing with bringing people together. So one of our larger properties, we have ice cream truck and ice cream social for the residents.
That's fun.
They love it. They really love it. And it's great. It's a beautiful property. Big, huge pool right out in the front. So it's an event that they always look forward to.
So on balance, hard time to get into multifamily investing? Or is there any part of this, is there any silver lining to this?
Time heals all wounds. So if you have a long horizon, who knows? We don't have a crystal ball, but if you're able to get into it, still be smart and careful. But look, at the end of the day, you're going to have to take some shots. But if you have a good business plan, you have an asset, you hear location, should do well.
And you guys Freeman's generally focused in the Northeast, yeah?
Right now our portfolio is Greater Philadelphia, all suburban, but certainly open-minded and having conversations with brokers and people for trying to step out a little bit from our current geography.
Any markets that for the audience listening, any markets that you're paying attention to, maybe you've not invested there, but you just feel that the economics there will be favorable for investing in multifamily?
Usually outside of our general region, I'm not as in tune, just because I don't, at least right now where we are in our company, I'm not really interested in getting on a plane, let's say. Me personally, I like the idea of going maybe a little more south, less snow removal to deal with and ice and whatnot. But Maryland is of interest, Virginia is of interest, and where I am, a lot of real estate is controlled by families, and there's not a lot of transactions. So the opportunities for purchasing are a little more scarce, whereas some of those locations in Maryland, Virginia tend to be institutional ownership, so it's a very transactional market. Certainly you have to pay attention for anything that you go in and buy, but that's where I'm hoping to look.
And for syndicators right now, is it a more difficult time to find investors who will participate in syndicated deals, or is that just strong as it's ever been? People always are in search of a good investment.
I hear a lot of different feedback. There are people who will invest with us. They've been with us for years. They know what we do. We've produced strong returns. So if we tell them, they don't ask a single question. They just say, how much? And there are others where if I talk to, they would be used to, for years and years and years, earning a certain return. So if there's been compression in the industry for the investment, there's certainly some socializing that has to be done to get them comfortable with maybe what would be an evolving market.
Yeah. There's a lot more uncertainty now about like rent growth and all that than it probably ever has been. Well, David, I'll let you get back to the show. I thank you for sharing with the audience some of your insights about investing in multifamily. It's been really insightful.
Thank you.
Appreciate that.
Appreciate your time as well.
Yeah, great seeing you. Welcome back to Apartmentalize 2022, the live streaming podcast of the Apartment Academy. I managed to grab Ken Marai, who I met last year, who is the founder and CEO of Facilgo. And I thought we'd talk to Ken a little bit about what they're up to, especially in the single family market. They're doing some interesting things. So Ken, real briefly, tell us a little bit about the company, what you guys do.
Sure, yeah, thank you, and thank you for letting us be here. This is such a great event. So Facilgo is a maintenance and renovation platform. We do a lot of work with single family homes around maintenance. The big thing about maintenance is it's really a process that involves a lot of different components. I think people generally think about inspections and work orders and procurement and fixed asset management, inventory management, all these different things as separate functions, but really when you think about them, they're all a part of a process.
Yes.
And unless the entire system helps you through a full process, it really doesn't help you because you're going between systems, you're not sharing information, you're not collaborating with your residents and suppliers. It's a lot more work and you don't get the efficiencies or the compliance that you really need. The same is true with the renovation process. And with the renovations, not only do you have the project that you have to execute, but you have to think about the financials as well. So what we've done is we've been very thoughtful about how the entire process runs to make sure everything stitches together and you can leverage what you've done in the past to what you do next.
Now, we often, maybe this is my own bias, because I've been in multifamily most of my career, but we often don't think of single-family home operators as having the same level of sophistication as multifamily operators. So tell us, how does all of that translate into the single-family home world? Who's interested in that? Who are your early adopters?
Sure.
How are you helping?
Yeah, so it's really interesting how single family looks at maintenance versus multifamily. With single family, the difference is a lot of the portfolios have these scattered homes. They're all over the metropolitan area. And if you can't really efficiently figure out how to service them to make sure there's not repeat visits, that you're choosing your skilled people for the right job and minimizing the amount of driving that you're doing, you won't be able to make any kind of profit on them because sometimes it's an hour drive between homes.
Yeah.
So unless you have the ability to figure out who to staff to a certain job and whether it's an internal technician or external staff, you're not going to be able to run the portfolio efficiently. So it is really important to have the technology to be able to help you through that process. Otherwise, it's going to be very, very difficult. And we've heard, some of our customers before they started using our software, their maintenance managers were spending 70% of their time scheduling. And how can you really run a portfolio efficiently if all you're doing is shuffling the cards? So what we've done is we've dramatically changed that. So, and the other thing that the single family operators realize is that their customer experience is all about maintenance. Maintenance is where the residents touch the company. And so if they want to have a good experience and have a good renewal rate, they need to make sure that maintenance process is stellar.
So in that, I heard a little about workforce management. I heard scheduling the right people with the right skills at the right time. How do you guys facilitate that piece?
So we have a lot of tools to be able to help people visualize what they need to do. And then also we have a lot of optimization technology to be able to put the right jobs to the right people. The other thing that we do is we allow a lot of self-scheduling by residents. So, a large part of the maintenance manager's job is now taken away. If you can do self-scheduling, in a way that is accurate and is going to make everybody happy, then you've really got a winning solution. So that's really the two areas that we've really concentrated on.
Yeah, that would be. I think that would be a lot harder in single family than multifamily, where you tend to have like the apartment community has its own website. You've got a portal there. How do you facilitate residents self-selecting a time for maintenance? Are they going to your website? Are you creating some other portal for them?
Yeah, it's a combination of, I think in the with multifamily, a lot of the resident portals don't, there's some level of scheduling, there's some level of matching, but it's not to the same level of working through scheduling over a geographic area over a team that oversees a large geographic area. And I think that's one of the things that multifamily can really learn from is, we're all running into staffing issues right now.
Right.
Nobody's available. The turnover is extremely high. So how do you deal with that? Well, one way is you outsource everything. The other way is you lower your level of service. I mean, those are two terrible answers. But the third answer really is to use your existing staff in a much more efficient manner. And that's what we do. We help people use their staff, across properties. Because if you think about single family, we're utilizing staff across multiple properties across a wide geographic area. And the same can be done for multifamily.
So single family really leading the charge in centralized maintenance.
I believe so, because I think the challenges are greater, and they spend more on maintenance than multifamily does. And
on a per unit basis?
On a per unit basis.
Uh-huh. Why is that, Ken?
Well, I think a lot of the scattered single family require a lot of more repair.
Uh-huh.
There's just more things that can go wrong in a single family home, and there's not as much standardization as you have in multifamily. I think it'll be different with the BTR communities, since there are new.
BTR meaning?
Build to rent or build for rent.
Yeah.
So essentially what people call them is horizontal multifamily. It's just a multifamily building spread over a larger geographic area. And so for that, people get their yard, they don't have shared walls. It's something that, and investors are very comfortable with it because they can see the comparable of a multifamily property and say, hey, that looks very familiar. And they can also service it in a very similar manner.
So we touched on the workforce management piece. I also heard you mention there was an asset tracking piece. How is that important to single family operators?
Well, I think with every single property owner, tracking assets is very important because you don't know if they're under warranty and you're trying to replace them, if somebody's damaged them and there's still useful life left. How do you track and how do you charge back to the resident when something happens? Or how do you track if something is not there that should be there?
Yeah, right.
So that's the age-old problem. So with single-family homes, it's easier to have those things wander off than it probably is in multifamily.
Yeah, it's unusual for a multifamily resident to leave with a boiler system in their truck.
I'd love to see that, though.
Ken, are you able to talk a little bit about generally kind of the investment market for single family? I mean, you're obviously working with operators. Are you seeing this as a growing part of the market?
Yeah, I think we've all seen that during the last several years, there's really been an underinvestment in the housing stock in general. So there's a big demand because we're just trying to catch up. I think the scattered single-family portfolio, individual home buying.
Yeah, the horizontal multifamily you talked about.
No, the more the scattered, the ones that are existing home stocks that people are trying to buy up here and there. A lot of those opportunities were great several years ago, but there's not as many of them available. So I think we're seeing more people buying portfolios combining, a lot of build to rent being a lot of people pursuing build to rent right now. So there are opportunities, and there certainly is a hunger for them. We just need more housing.
Yeah, well, yeah. You solve that problem, Ken, you can make a lot of money.
Yep, absolutely.
Tell me a little bit about the advantages that you have in the single family market when it comes to pricing. Like there, again, it might be my bias, but I think of single family operators as being pretty thin in terms of budget. Maybe that's the wrong. Maybe that's a misperception. But what can a single family operator really afford to pay for technology on a unit by unit basis?
I think, well, the analogy that I've heard from people in the market is, when they started creating these portfolios, during the housing crisis, the first thing they had to figure out is, wow, I bought some houses that need some work. How do I renovate these? And so they came up with a process for that. Then the next thing was, oh, my renter just moved out. I need to figure out how to turn this thing. So they figured out some simple processes for that. And then in the meantime, they also figured out some simple processes for maintaining the properties. These were all, okay, we're just going to get it done. It may not be the most efficient way of getting these things done, but then they started to look at, okay, now how do we optimize?
Yeah.
And we're in this cycle right now of trying to figure out how to optimize all of these processes. And there is an appetite because I think technology probably for single-family homes is probably provides more contribution to the bottom line than it does for multifamily. I think they're more sensitive on the cost side, and so the benefit that technology can bring is even greater. The value is a lot greater to these single-family home operators than it is for multifamily.
Do you think you'll see more of the the Colony American Homes model with the large, funds buying up large, or are we past that now and you're going to see just more, I don't know, call it organic growth in the market?
I think single-family rentals are going to follow the same kind of path that multifamily has in terms of consolidation. Right now we have a very, very fragmented market. Still, the amount of rental homes versus multifamily, I mean, we're kind of neck and neck right now. The industry for SFR is pretty nascent. The players are all young. They aren't as large as they could be. And I think a lot of them have aspirations to be extremely large. And I think the market will allow for that, especially as they figure out some of these operational processes being more efficient. That's going to be, a competitive advantage for them. And the ones that can operate really well are going to grow like crazy.
Yeah, and the ones that are operating well, are they using the major PMS systems that we know in the multifamily side, or is there, who are you bumping up against in terms of what are they using for an accounting platform?
Yeah, so it's really interesting on the single-family side where you see some dissatisfaction. So they are trying to use some of the things that are available with multifamily and try to fit them into single family. What we've really found is that they are two different beasts.
Yeah.
It is very, very different, and so there's a lot of appetite for being able to solve problems right now.
Yeah,
which
that's
is
a different
great.
business, Ken.
It is.
One business at a time. Okay, focus on one thing. Well, I want to let you get back to the show. I knew you had kind of a tight time frame, so I appreciate you getting here. Any thoughts you want to leave us with? And if you're thinking about becoming an investor, what you should think about in terms of, a technology platform to help you maximize your investment?
Yeah, I think. I can't remember. Years ago, there was I was in this one. Some real estate economist was talking, and his advice was borrow money and create these portfolios, borrow $1 billion or more. And so I think the time is now that this is a long-term play, especially for single family, that there's going to be opportunities in the next few years, because if you look long term, the market is very, very healthy. There's opportunities for consolidation, and again, I think you can build economies of scale if you are a very efficient operator. I think whoever figures out the operational efficiencies is going to be able to create a very massive portfolio and do quite well.
All right, and you have a booth here?
We do. We're at booth 606.
All right, so if you want to learn more about what Ken's company does, booth 606. Ken, thanks for jumping in. I hope you have a great show.
You too.
Good
thanks
seeing you
so
again.
much for thanks so much for having me.
You're welcome. All right, we'll come back up next with Amy Weisberger coming on shortly. We're back. The Apartment Academy live here at Apartmentalize 2022. We dragged over Amy Weisberger. Amy works for an operator. You want to tell us a little about your company, Amy, and
Sure.
Where you guys are located and the properties that you guys operate?
Sure. Hi, I'm Amy Weisberger. I am the Senior Vice President of Corporate Strategy for Morgan Properties. We own and manage about 93,000 units in 20 states, 350 some odd properties. We're the third largest in the United States.
Yeah, congratulations. You guys have
thanks.
just skyrocketed in the last 5 years.
Yeah, it's been quite a ride. Yeah.
And how long have you been there?
I've been there for 28 years.
Wow, so you've seen the whole thing.
I have.
Yeah.
I've seen it all from infancy on when I started.
Did you start in the field?
I did. I started out as a leasing consultant and then was a property manager. I was a regional manager. I have a long history. I used to be the head of training, and now I oversee corporate strategy and lead up our innovation team.
So a lot of the innovations and a lot of the things that are happening really debut here at Apartmentalize. What are you looking for here in this show? What are you scanning for?
Yeah, so I'm always looking for what's next, what's going to make things more efficient, streamline operations, how to make everybody communicate better between different departments, how to make things better for the residents, how to make more money for the company. You know, it's just a few little things I look for.
How to make more money for the company, emphasis on how to make more money for the company.
Well, that's always the bottom line, right?
Yeah.
The more
but
efficient
taking care
you
of
get.
residents.
Absolutely.
leads to that.
Yeah, we wouldn't be able to make any money if it weren't for our residents, right?
So let's talk about some of the challenges that Morgan has faced and how you solve them, what you're still trying to solve. Why don't you kind of lead us down that path?
Sure. I mean, it depends on the topic, what we want to talk about. You know, COVID was top of everybody's minds for a while and then they talk about the Great Resignation after COVID. So, you know, I think from a staffing perspective, that's been a challenge with how do you do more with less, and how do you take care of the residents and the property and get apartments ready and make sure that the curb appeal is there and work orders get completed and apartments get leased quickly with less people, less resources.
Do you think we're resigned to that, Amy, at this point? Like we're just going to do more with less? Or is this going to turn around and we're going to get better recruiting or pay people more? Or
I think everybody's trying to figure out what the secret sauce is. There's been a lot of talk with benefits and with, you know, pay and all of that. But I really think that we're going to have to learn how to become more efficient, and that's where technology comes into play. And that's really where I think you hear buzzwords like centralization of leasing teams and AI and all of these things that are buzzwords today that people are sort of dipping their toe into. That's going to become the norm.
Yeah. Is there any AI efficiency technologies you've done more than dip your toe into that you guys have adopted so far?
You know, I think as far as AI goes, I'm not really sold on any one of the AI products yet that are out there.
Yes.
I think as it relates to giving a resident a faster response, knowing what they want, being able to answer their questions 24/7, and prospects too, that's where AI comes into play. We've been focusing more on the customer relationship management side with AI, trying to figure out how to get that working. But yeah, technology in general with different products that we've tried out from our maintenance teams, for our leasing teams, for our back office teams, that's really where we're focusing on how to make things just easier, more streamlined, and more efficient for everybody.
When you say customer, you're focused right now on the customer relationship management side. What does that mean? Does that mean fielding maintenance requests in an automated fashion, or fielding leasing requests? What does that mean?
It's all of the above, right? We have resident portals today, most companies do, where residents can go in and they can submit a work request if they have it, or they can ask a question about their ledgers. But it's more taking it to the next level of not having to wait for that response. It's more of that self-service and making sure that somebody right away can respond.
Somebody or something?
I don't think that a AI piece is going to be able to fix somebody's appliance, right? But making sure that
Probably not, but
making sure
who am I
that
to
the
say?
right person, and maybe in a more centralized fashion, is able to get dispatched to do that.
Yeah. And where is that technology in terms of evolution? What is it lacking right now that is still in your mind like, well, we're still trying it to see if it works?
You know, from the leasing side, I think they're further along than they are on the maintenance side. The maintenance side, what I'm seeing is trying to get compliance, trying to get training, trying to store documents, trying to handle work requests, trying to do production schedules, and putting it all into one spot is still a work in progress. I think it's coming along, but we don't really hire our maintenance teams to be technologically savvy. We hire them because we want them to be able to go out there and fix things, right? And to take care of the residents and the property. So it has to be easy for them to use, and then it has to be easy for the rest of the team to follow up and see what's going on. And so keeping everybody on the same page is where I think we're still not quite there yet.
Yeah. Yeah, it's one of the things about our industry that I've always said is very difficult, especially the size of Morgan. I mean, how can you possibly keep all of those different communities doing the same thing at the right time in the right way?
Yeah.
You know, it's a big struggle. Always has been.
Yeah, it's not so much that you have to do everything the same way all the time, because we're not a one-size-fits-all company. Properties operate differently, different demographics, different things. You know, rent's due on the same day every month, right?
Yeah.
But how we go about following up and collecting and all of that, we can give technology and pieces to help, but every property is going to operate just a little bit differently.
Yes, but there was the Morgan. I remember the Morgan way.
The Morgan way.
Right? There is this idea, this concept, this archetype of there is a way to do things that fits the Morgan.
Morgan manners. We have Morgan manners.
Oh, it's not the Morgan way. It's Morgan manners. I was close.
Yeah, it's good. It's close enough. It means the same thing, right? How we treat our residents, how we treat each other, how we treat our vendors. There is a certain protocol that we expect from everybody, and it's part of, you know, Morgan has been around for a long time. It started with Mitchell Morgan in 1985. Now his two sons have come into the company, and even though we've gotten so big, we're still a family company, and we try to remember that with everything that we do, that no matter if you are in Florida or you're in Pennsylvania or you're in Nebraska, you're still part of the whole Morgan team and family. So that's how we try to keep things similar yet different.
That's actually pretty impressive. I mean, they're, you know, to become the third largest over a course of some 40 years, somewhere in that range, is there something about the Morgan manners, the Morgan manor, or the way the company was founded, or your corporate culture that you think has led to the success of the company? I mean, you've been there over half.
I've been there
the
a
time.
while. Yeah, I know, and I'm so young. You know, I think that we always strive for what's next and how can we be better as we get bigger. And we have two, you know, next generation leaders who really are leading the charge for acquisition. We don't build, we only acquire. And then, you know, our secret sauce is to figure out what we need to do to, usually it's an undervalued asset, and how are we going to turn it around, how are we going to improve it, and how are we going to then keep it as a long-term hold. That's usually what we do. And they've gotten really good at it. So, you know, but along the way, we know that technology, and that's one of the reasons why I have this position, is going to be the competitive advantage for, and I think everybody's trying to find it, right? What is it? What's next?
It is the thing about this industry that I've always loved, is that you're phrasing it as a competitive advantage, but it's not really that you beat the next guy. It's like, how do you provide more profit for your owners than maybe the next guy? But there's a very egalitarian attitude about this business. Like, if you have a really good idea, you'll happily share it with somebody else. Yeah,
we do. But you know, there is. We're all sort of competing for the same residents, right? In an area. So there is something to be said for what can we do that's going to make it easier, better living experience, provide more amenities, provide more services, so that we capture that person, because apartments are apartments for the most part, especially in our class. And so what makes it different is the people and the experience that the person has when they come with us.
Is considering the amenities that you provided at the communities, is that part of your purview?
So we have a whole facilities department that, and an asset management department that really tries to take a look at what can we do amenity-wise, and that's usually part of the business plan when we buy a property. But yeah, I mean, looking at different products, sometimes technology is the amenity that we offer, right? From internet to smart homes, like sometimes that becomes the amenity.
Is there anything in particular you can speak to that you think is that you can anticipate Morgan adopting on that front?
Well, we are doing smart homes, and in a lot of our properties. That's a big initiative for us, trying to make it easier for people to sort of just have one control for everything that they're looking to do in their home. And we are looking at internet, making sure that people have what they need, so that people are working from home more than ever now, so they want connectivity. You know, as far as other pieces of technology that we're looking at, we're always looking for ways to engage our residents, and the way that they want to be engaged, where they might not have to come into the office.
And what does that look like?
There's different products out there that residents can use that allow them to communicate with us, that allow them to play games. Gamification is big. Earn points, earn rewards for doing different activities that are not necessarily coming in and attending an event in the office, but maybe it's a virtual event, and they can earn some rewards for doing that they can use in other ways.
Got it. So Amy, I want to let you get back to the show, but given your position within such a prominent company in multifamily, and the fact that innovation is part of your responsibility, leave the audience with 5 things they should be thinking about. I mean, 3. I'll make it 3. 3 things they should be thinking about in terms of innovation. What's coming next in our business? What this should look like.
I think that CRM is a big one, and how we can assist our maintenance teams to get their jobs done and to onboard them and to be compliant in whatever they need is going to be another thing. And like I said before, that whole AI experience, both for the resident, the sales team, the maintenance teams, all of that is coming to the forefront.
Great. All right. Well, Amy, I thank you for taking some of your precious time out to talk with us.
Thanks so much.
Appreciate it. All right. We'll be back with some more live feeds from Apartment Academy at Apartmentalize 2022. Academy. I wanted to just talk a little bit more what we're going to talk about. We'll just talk about it live. So Tina's with us. Tina has her as a management company in Iowa, in Des Moines, Iowa, based in Des Moines, Iowa, that she founded, and we're going to talk a little bit about. Well, first of all, tell us a little about the company, when you guys originally started, the types of real estate that you guys manage right now, and then we'll expand on that.
Okay, yeah, so I started in property management 25 years ago as a leasing agent and have been pretty much in every position. In 2017, I decided that I no longer wanted to work for somebody, so I got my broker's license and opened the management company with one person in 2019, and now we have 80 employees on our payroll. We do manage through 3 different states of the Midwest: Iowa, Kansas, Missouri. We have about 4,500 units now, and we mainly own and manage workforce housing.
And 4,500 units. What would be your projected growth? Like what's your goal over the next 5 years to grow to?
So in 3 years we grew 4,400 units. So hopefully we can triple or quadruple that.
At least that.
Yeah. Yep.
So talk a little bit about it is far more difficult to operate a management company at a smaller scale than a larger scale.
Yes.
You don't have
Definitely.
levels of middle management for maintenance. How do you grow a company successfully as you have from an acorn to 4,500, 5,000 units?
Definitely you have to be open to change, of course, but I think it's using some of the systems in place that the apartment industry puts for you. So like we use some compliance dashboards, HR dashboards. We utilize third-party companies to help us, and then we focus on what we're good at, which is the operations with our regional managers and on-site teams.
Is there anything in particular in terms of the tech stack that you would that's been more important, more critical to your success than others?
I would say on that note, like our property management software that we use, it's an all-in-one. The less logins people have, the more they're going to use stuff, right? So we have about 3 platforms that are really our go-tos.
Got it. And the management, the oversight of a 4,500 unit portfolio, is that all regional managers? Do you have a whole cadre of regional managers, or are you at a scale where you have like a director of operations who handles all of that? Like, when do you start segmenting into regions?
Right. So I think some of that's going to be on your scale that you were talking about. We have some smaller communities. We're now looking to just manage the larger communities so that we can then scales of economy, right? So we can have less people, but we do have, for our 4,500 units, we have a vice president of operations, we have 3 regional managers, and that's because we have to, they're not by our corporate office, so we try to have them local just to be on the sites.
Got it. And all of this is, you have a mix. Most is, we'll call third-party managed.
Correct.
But some is owned and managed, owned
Correct.
and operated. Yeah.
Yes.
Is there, directionally, are you hoping to expand the third-party business, or are you hoping to do more on develop more owned assets?
So a little bit of both, but for me, my passion is the management. So I have ownership in some properties, but my focus would be growing the management company. My partners that I have now in the management company, as we grew and merge with them, they will do more of the buying on that side. And I'll do a deal here or there when it comes along. I've had some conversions that I've done in the Des Moines market just lately, actually.
Conversions like what?
So in 2019, going back a little bit, I graduated from the American Institute of Business in Des Moines in 2000, And I actually, in 2019, we bought the college and then turned the dorms into multifamily housing. So it's 93 units, and today we're pretty much 100% occupied there. So that was a really good fun development story to add to my career, I guess, the portfolio. And then...
What do you mean you bought the college?
So bought the college. It was a great story. It was donated to the state of Iowa. They weren't able to run the college anymore. I think a lot of stuff went online, paperless, things like that. And so my partner and I put in a bid and bought it from the state of Iowa.
Wow.
It was an incredible project. We sold off some of the parcels. There were obviously the classrooms and things like that have now been sold, and there's businesses operating in those. We kept just the the dorms, which were set up as apartments, 1 and 2 bedroom apartments, and did a value add to that. So we put in about $6,500 a unit, and now again it's full, and it was a great project.
Your value add was your value add budget was $6,500 a unit.
For interior, yes. Yes, the whole project was about 1.5 is what we invested into it additionally.
That's a pretty healthy value add budget.
It is, yes,
Yeah.
yes, and we did local financing, so it was a big risk. Lightning struck, and there we were. So it was, again, just an awesome project to have. I have a great partner on that one too.
I'm just curious. I love projects like this. Early on in my career, I worked for a company in Los Angeles that did a lot of adaptive reuse in downtown Los Angeles. For example, one of the most successful projects I was involved with was the repurposing of the Standard Oil building, which had been a vacant office building for a number of years before it was redeveloped into 122 units of luxury housing, multifamily housing. So I love those stories. And at Aimco, we had huge portfolios of adaptive reuse in downtown LA. So the idea of taking a college and looking at those buildings that could become residential,
right,
versus those that couldn't. That's been a very interesting pro forma. How do you look? Are you in the active market right now, looking for deals? You said you'd like to acquire, but that's not your side of the business.
I'm more passive in that. So if a deal comes along that one of my partners is interested in, then we'll work on it together. They're probably a little bit more aggressive than I am, just because, again, I want to do the management side of it. And usually it just depends on how it works out with who's going to do the rezoning and some of those things. Who do we know that can help us and things like that.
Can I ask about the Iowa market?
Sure.
As an Iowan, as a former Iowan, I grew up in Burlington, Iowa. Iowa has been, I think, a net exodus of people leaving the state. As a real estate operator, how do you think about investing in a market where, unlike, say, like a Phoenix, right, or Dallas, which always seems to have an influx of people, like you can't go wrong.
Right.
How do you make strategic decisions in Des Moines, Iowa, about that's worthy of $6,500 a unit?
I think it's what you said. People flock to Des Moines, people flock to Dallas, they flock to Phoenix, but to me, they are coming to Iowa. So you have some that are leaving, and then you've got others coming back. I think they leave for college, they start their family, they want to move back to the Midwest. And we do different levels of workforce housing. So it doesn't worry me at all, because somebody is always looking for that next step up in apartment before they purchase a home, or things happen, cutbacks happen, and they're looking for that another price level. In the Midwest, our cost of living is what I would say is average, and I will say I do not do any A+ properties. That would worry me personally. I can't speak for any of my partners on that, but we do try to do the workforce housing and do the value add with it.
Got it. And is there an amenity mix? Is there a service mix that's different now that you think solve for than it was prior to COVID?
I don't know about prior to COVID, but like if your communities aren't pet friendly, I feel like that's going to do a disservice, quite frankly, to your property. Again, my opinion on that, and I don't have any pets, but I just, from the renter side of it, that's what we see. It brings in a ton of income for us on the pet side. So that would be one thing. And then also, with your question in regards to COVID, is what do we have outdoor related? So bike storages and things like that is what we try to go ahead and make sure that everybody knows, like, where we're at on the bike paths and things like that. Des Moines is doing a lot of development of parks and their natural resources and things like that too. So
you, as a result, not the same pressure to have those amenities on site, because you have in the surrounding environs parks and such.
Correct. Like the college where that was, it's called the Village at Grays Lake now, but Grays Lake, the city has put a phenomenal amount of money in there just to make that area amazing compared to what it was 10, 15, 20 years ago.
Okay. Switching gears a little bit on you.
Yes.
What do you, as a smaller operator, I don't know if you I don't know what SMB is in this business, maybe somewhere probably about 2,000 to 8,000 units maybe. As an operator in that class, what are you looking for in terms of innovation and technology to help you do your job better?
Anything that I can do for my phone. So, but I would say...
Because you're mobile all the time, or why are you so mobile focused?
So, I am mobile all the time. However, I can run the company from my phone. I can do property management software. I can do our compliance dashboards. I can do everything on our applicant tracking. So everything is through my phone. So if a company has a platform that will help us manage better and more efficiently, then that's what I want. So I arrived in San Diego on Sunday, and I got out my laptop for about 5 minutes because I had something saved on there that I needed.
Yeah.
So, I think our employees want that. Our team members want that too. They want the efficiencies. It's just getting them to buy into that and actually trying it so they see all the benefits of it.
Well, counterintuitively, because I agree with you, counterintuitively, this industry, I think, has really struggled with how to handle mobile devices, because if you're using a PMS system on a mobile device, you have the opportunity to have personal resident information on a device that then you need to make sure doesn't go with somebody if they're terminated or they quit. Like, there's these challenges that have made companies really reticent to sort of officially distribute devices. But how have you guys solved for that?
So we are just prepared if something happens, an employee is terminated, we have a plan where we cut everything off like right away, because all you have to do is it would take me 2 seconds to go in and delete somebody's login. And then they're not going to have any access to that once they're out of the system. And it's partnering with those companies that offer that to make sure that that's how they work their data as well on that. So I think we have not had any issues, but we just have a very a set checklist of this is what has to happen in the event of this. Again, 25 years, but mainly paperless for the last 12, and have not had an issue. I shouldn't say that, but we haven't. And I think it's much better than what if somebody comes into the office and takes all the paper copies or something like that too. So it can go either way. It's just how you spin it and what you put in place to make sure other things don't happen. That's
pretty amazing, paperless for 12 years.
Yes. I don't know how much time we have, Daniel, but I had a baby in 2017 when I closed my first property, which was 97 units. Started doing a water bill back on it, had an exit of maybe 20 to 30 residents. And I did everything from home with my baby in hand, because I could respond to guest cards and things like that at 2 a.m. And within 2.5 months, I had everything leased up, and it was fine. And I, maybe went to the property a couple times a week for a half hour. So it was virtual leasing before virtual leasing was a thing.
Yeah, you led the charge.
I'd like to say I did, but it's a story I often share to also let our team members know, like, change is good. Just try it. People will welcome that. They want to be able to save time as well if they're coming to look at your community or something. So,
there's brave words from somebody in an industry that tends not to feel that way. Often, like, leading change is difficult for a lot of folks, and because people, this is just the way they've done things. And real estate is an industry that's ensconced in tradition and old school.
I think that is, and it just another short little sidebar. So we just recently, my partner and I from the college, we bought a hotel and made it into an apartment community as well. And it's along with what you're saying, you have to have the vision. So other people will look at the deal and they're so set in how they underwrite things, or, you have to have this and you have to do this. And we just went into it open-minded, and everybody can see the vision of it, and it's really coming together nicely. So it was 112 units. We closed March 1st, and we are almost done with all 112 unit renovations, and that's in a tough market where we're, struggling to get supplies and things. And we've just got a few units left, and we're about 30% occupied right now.
Wow. I know we just have a few seconds left, but I'm curious about that. How do you handle in a hotel to residential conversion? How do you handle kitchens, that sort of thing?
So they were suites, so they had full kitchens in them.
They already did.
So that was a good, starting starting point for us. So it was a basic rehab in them, and there wasn't the kitchen conversion. Sorry.
All right. Well, I'm beginning. You're painting a picture here, Tina, of change is good. You're thinking out of the box in terms of your real estate development and acquisition strategy. So it's not a surprise you're at the forefront of thinking about technology and that you're mobile
Right.
first. Yeah, pretty impressive.
Yeah, it's exciting.
All right. Well, thank you so much for taking some time to talk with us a little bit. We appreciate it.
Yeah.
I'll let you get back to the
Thank
show.
you. Thanks for having me.
We'll pick up again with our next guest here momentarily. Thanks for joining us. right, welcome back to Apartmentalize 2022, the live Apartment Academy podcast. Next up on the podcast today, Abby Huffman, CIG Communities. Hi, Abby.
Hi, how are you?
Thanks for joining us,
Thank
taking
you.
time out of a very busy show to talk with us a little bit.
Excited to be here.
Thank you. Abby, you, I would say, have an unusual path to the operator side. You spent so much time on the vendor side. Tell us a little bit about yourself first as context, and we'll talk about what that difference is, like different paths within the apartment multifamily world,
Sure.
you know, for professionals.
Absolutely. So, Abby Huffman, I'm with CIG Communities, and we're headquartered in Cincinnati, Ohio. We own, develop, and manage communities throughout the Midwest, the Southeast, and Mid-Atlantic. And we currently have around 1,200 apartment homes that we're managing, but certainly looking to grow that, hopefully significantly. So my background, it is kind of unique. I spent the first 7 years of my career in an operations side. So I worked for another management company, and then in 2013, I switched to the supplier side of the business. So I spent 7 years there in property management technology, and I would say so far I've had an incredible career. This is such a amazing industry with a lot of opportunities. And then just last year, it made sense for me where I am in my life and what I'm looking for and what I'm really passionate about to go back to the operations side. So I found my new home at CIG Communities, and it's been a lot of fun.
What is it about being back on the operations side that appeals to you?
Well, everything in a way. I mean, there's so many aspects to what we do that I really truly enjoy. But I would say when you think about the biggest differences, is we are solving problems that have to be solved immediately when you're on site. And not that suppliers don't have that same experience, but where I was, we were solving problems as well, but it took a little bit longer to get those implemented for our clients. Whereas when you're managing someone's home and or someone's looking for a new place to live, that's a very crucial time in their life usually. Something major has happened. Maybe they are starting a new job, or their relationship status has changed, or they're moving out of home for their parents' house. So it's just such a major time in people's lives, and there's so many things that could happen, and it's so important that we take great care of them immediately, as soon as possible. And I just like that. I like solving problems very quickly. That's on the site level, and that at what we call the home office level, they're so dependent. If it's something, a decision that can't be made immediately by them, like it's urgent. Like we have to get to that immediately. And I just like that sense of urgency and executing quickly.
I hear so much enthusiasm in your voice,
Sure.
Talking about the challenges with residents, and oftentimes I talk about that as what makes this business hard, and why I think there's a number of reasons for this, but one of the reasons we have retention issues is the emotional toll that being in this business can take on a person, because you are so embedded in their lives in a way. People are getting divorced and they can't afford the rent, and they have to come to you and you have to tell them you got to pay the rent. Or people have the wrong breed of dog and you got to tell them. Tell me about what kind of mindset looks at that and says, but I can help, and why that was more appealing than being able to avoid all of that mess.
Sure. Well, I think personally, and I would say so many people that I've met in this industry, I do have a degree in psychology, and I found that a lot of people that I meet,
you're a people person.
Yes.
In that
Well,
way,
you'll start interacting with people, certainly at a conference like this, and you'll ask them, if they went to college or whatnot, what did you get your degree in? And oftentimes it is in something like that, a social science. And so for me, I wanted to help people, and I would say most people in this industry, I mean, if you're going to be successful and really love what you're doing, you have to be able to want to help people. So it doesn't mean it's always easy, and some people don't want to help themselves, and that can be a real challenge. But I think for our teams, just encouraging them that, to understand and to listen, it's not always easy, but at the end of the day, this is someone's home, and that's one of the most basic human needs, as I shared with you, is this is shelter. And it's just really important that we keep that in mind, no matter how stressful or elevated situations can get. So, plus you just meet so many people in this industry. It's amazing.
That's true. Let's talk more about the soft skills on the operations side, because what I want you to do is I want you to contrast that to what your life was like on the vendor side.
Okay.
So that people listening, if they have a choice for a career path, is they can decide which one of those things feels more like me.
Sure.
So talk a little bit more about the soft skills, because they're so important on the operations side, and then we can switch to what vendor life is like.
So soft skills on the operations side.
Yeah.
Well, I think, it's interesting. I think you have to be a people person. You don't necessarily have to be a people pleaser, but you have to be able to understand and to listen to people. And that certainly isn't just from a resident experience. That certainly comes from as an employer. You have to listen to your employees. Things are changing. There's a lot of evolution happening right now. So it's important that you listen to people. I think just being supportive, being positive, and that's not just in this industry. I think it's so important that we focus on what's going well. We've had a lot of things that haven't gone well, certainly in the past couple of years, but that's always going to be the case. So having just that positivity and staying positive and just believing that things are going to work out. Might not look the way we thought it was going to look, but so those are things that I think are really important.
How about dealing with confrontation?
Dealing with confrontation,
Yeah,
sure.
Yeah. Does CID train people on your team members on confrontation and how to deal with all this stuff?
I think we have a very tight-knit team. We're a smaller organization right now, and we have very much open communication amongst our team members. So yes, we absolutely talk to our team members. We also do trainings that everyone takes. But when it comes with to dealing with either resident conflicts or employee conflicts, it's important that we keep the lines of communication open, but certainly also that we ensure that we have a good understanding of what's really driving the confrontation.
Yeah. And now let's contrast that with what was life like for you on the vendor side, and what skills better serve somebody on that side of the world?
I had a lot of fun on that side of the business. I will say, so I went from operations to supplier, back to operations. So coming into a position that I had with the knowledge of what it's like to be on site and what those challenges are, I think when you have those sorts of skill sets and those experiences, certainly when you've been on site and you know what it's like when someone's trying to get into the leasing office, they're banging on the door, or there's a serious emergency. When you've had that sort of that experience and you can go to the supplier side, I think there's a lot of value in that. But for someone who maybe doesn't have any industry experience, it doesn't mean you can't be really successful, because you can. But you have to listen to your clients. You have to attend events like NAA, be a member of the National Apartment Association or your local affiliate, because it's so important that you educate yourself. You need to understand. I mean, there are things that could impact you, whether it's fair housing or certainly legislation that's taking place constantly. You need to be in the know, and the way that people can educate themselves is by joining an apartment association. Additionally, you get the ability to network with others.
Yeah.
So I think it's important. You don't necessarily have to be an extrovert like myself, but definitely get out there and attend events, network as much as you can. Oftentimes I found as a supplier, you can cold call, you can network as much as you want and try to get in front of the decision makers, but sometimes, and I would say actually a lot of times, it's your supplier friends. They already have the relationships. We're all calling, you're all calling the same people, so why not, ask for an introduction that way. So don't ignore the suppliers in the industry. If you don't know people, call on them too, and they'll help facilitate some really great introductions for you.
So I think the industry, and maybe this is what you were alluding to, sort of smells it on you if you really don't know what you're talking about.
Yes.
And that probably makes it hard. So getting out, getting the education, the experience, and networking really probably critical to success.
Absolutely.
Assuming you're mostly on the sales side. I mean, that's...
Yeah. I mean, no one expects a new salesperson who's never been in the industry to just get it or to understand, but you have to take the initiative to try to figure it out. So, whether it's listening to your podcast, watching it, get in the know and do as much as you can to really understand what are the challenges, what are your clients faced with, and how can we help them.
Sometimes folks in the industry are curious, or on one side or the other, they're wondering what sort of compensation looks like. Are you in any position to talk to, like, if on the vendor side, like if you're in sales in some capacity, about what do you think those folks should expect to make on an annual basis?
Well, don't feel comfortable just stating any sort of range, certainly because I think it depends on where you are, what space you're in, your experience. But I think there's a huge opportunity that if you want to have a very successful career, we'll say in sales, this is a great place to do that. Yeah. Certainly if you're building a lot of relationships, there's a huge opportunity there. And I think our industry, since you're specifically asking about compensation, our industry is really looking at this. I mean, we have to more, and probably all industries are. I spend most of my time in this one, so this is what I know. But I think we really do need to evaluate that, because operators will lose people to, going to the supplier side, but the same could be said the other way. So I think it's important that we're always evaluating and making sure that we're taking care of people and doing what we can to not lose them, and compensation's a pretty good way to do that.
Yeah, I think what people often get attracted to when they think about the vendor side is, I think I'm comfortable saying,
sure,
hey, it is not unusual for folks on the vendor side who are in the sales capacity to make $200,000 or more. That happens for sure. Rarely happens on the operations side unless you're at a regional above level, right? But what people forget about, I think, is that if you don't perform on the vendor side, then you're out of a job. Yeah. Whereas you might not have the earning capacity on the operations side, but there's so much more forgiveness. There's so much more willingness to give you time to learn and do better and improve in training. You can make mistakes. You have the freedom to make mistakes.
Sure. Well, I think the other thing is, when we think about compensation, it's not just, what does my paycheck look like? There's so much more, and time, to me, is the number one thing. That's the only thing that you can't get back. So what does your time look like, and how does your company and how does your culture allow for people to do their jobs and to get their jobs done, but also have time with their family, with their friends, with the hobbies that they enjoy? I think that's really important. As a company, we're definitely taking a look at flexible ways to make sure that our team is finding work-life balance, and that's something that everybody talks about, but what are you actually doing about that? So we have a lot of really fun holidays that our team gets, and sometimes it's just random. All of a sudden, the president of our company, he sends out an email and everyone gets the day off. I mean, those are really fun things that can offer a lot to someone. So it's not just about the paycheck that they're getting. There's more, and there's so many other areas that you can compensate people. It's not just about the dollars always.
Yeah, well, and I think it's not a stretch for me to say that part of the compensation for you on the operations side is the emotional satisfaction you get from helping people.
100%.
Yeah. Which it's hard to feel that on the vendor side in the same way. I mean, you get some of it. Your clients, speaking of somebody who's on the vendor side, you love to see clients embracing your product, but it's not their life the way that somebody's home is.
Oh, absolutely.
Yeah.
It's very true.
So talk a little bit more about the culture at CIG. What do you do to ensure that work-life balance? Because that can be a problem for some operations.
Yeah, and we're certainly, no one's perfect, and it's not like we're not putting in long hours at times. I mean, we've got a lot in the pipeline, and we've got a lot of goals and initiatives that we're working on. That it's going to take a lot of time, but our culture, we are a family-owned business, and I would say that anytime you interact with a member of our team, you just get that vibe that we're a family, we're in this together, we're going to help each other out, we lift each other up. If something's going on with someone in our team, whether we know exactly what that is or not, what can we do to help you? And that comes from the top, and the founders and the president of our company, that's incredibly important to them, and it's just evident in the way that all of our employees are treated.
Yeah, especially with smaller operating teams like over at CIG, it's much more difficult to operate a company at that scale than it is a large, company with 100, properties across the country, because you don't have the same middle management to support it. So everyone has to wear a lot of different hats. We were talking a little bit before about the technology that you guys are looking to put in place to help bolster the team so that you can be successful as you are scaling.
Absolutely.
But be successful right away. So talk a little bit about what's the right tech stack for a growing company, do you think?
Well, I think it depends on what your company's goals are, what you're looking to accomplish. Definitely paying attention to what type of assets you're managing, and certainly the needs of your team. But from our perspective, I'm going to take a step back outside of tech. We build a solid team, and then we want to build a solid tech stack. And it starts in the middle with your PMS and what you're using there. But certainly, we've implemented so many different pieces of technology. We've moved on with Blue Moon leases, NAA Click and Comply. There's so many different pieces that we've implemented, but it's important that they speak to your property management software. And we want it to be as seamless a process as possible for not only our residents, but certainly our employees. There's so many different systems that everyone's logging into, and we just feel like that's one of the first questions that we're going to ask. Does it integrate with our property management software? And if it doesn't mean that we're not going to have that conversation, but we will really evaluate if that's going to make sense or not. So we've had a lot of different things that we've rolled out. Revenue optimization, new leases, virtual tours. I mean, you name it. There's so much out there, but we're certainly evaluating all of them.
Is there anything, I know we need to let you get back to the show, but is there anything that you're evaluating right now that's on the horizon that you're interested in? Maybe you haven't adopted it yet, but it's like you think that's where the industry's going.
I don't know that I would say this is where the industry's going, but something that has really caught my eye recently are just they're like kiosks where people can rent all different types of items. So maybe you need a basketball for the day. Maybe you need my vacuum cleaner doesn't work anymore. I can go rent that Dyson downstairs. So I think that stuff like that is really cool, and providing those items or things like that, resources like that for your residents, that just makes it easier for them. They don't have to leave the community to get what they need. So I don't know if that's where the industry's going, but I'd like to see more ways to just keep our residents in our community, or at least make them feel like we have what they need here.
I love that suggestion.
Yeah.
I think that's the suggestion of the day.
Okay.
We need some kind of alert when that happens, but if we had it, that would now be all lit up as the suggestion of the day. Well, thank you for joining us on
Thanks
the
for
Apartment
having me.
Academy
It's been a lot of
podcast. I
fun.
appreciate it, and good luck with the show, and I hope you find some cool stuff.
Thank you. I appreciate it.